Anyway, Sunday we going to my parents' place. We celebrating Lokman's birthday. Yeah. I'm Syaiful, I'm 34 years old. I'm working at SMRT as a senior engineer. I have 3 kids, 4 years old, 2 years old and 3 months old. And I'm the sole breadwinner of the family.
Tariq, what do you think we should buy for Abang Man? His birthday is tomorrow, you know.
You mean toys?
You want to buy him toys?
I must ensure that I have a constant flow of cash. Plus I have kids who are dependent on me. And also I have 2 retired parents who has not been working for more than 10 years lah. My parents who's getting older and for their medical bills and whatsoever. Yeah, so our HDB loan, I think you're always going to deplete soon within 10 months, right?
Yeah.
So that's also going to be a very heavy burden.
And we need to think of how we can grow our savings and maybe we can like write down what are we paying for, what kind of financial responsibilities we have. And then we see monthly how we can adjust our spending.
I'm here today to go and meet the financial advisor to get more advice on how I can help with my financial constraints.
Hello, Saifu.
Hi, hello.
Welcome to AIA. How are you today?
I'm feeling good.
That's great. Come, let's go. Yeah.
For me, as a sole breadwinner, I have 3 kids at home and I'm also helping to take care of my retired parents. So is there any ways that I can save?
Well, this is really very important because should something happen to you, whether you fall sick or when you're not able to work, you can imagine how stressful it will be for your family, especially your wife. Yeah. It's not just making sure that your family, you take care of the monthly expenses. You must also make sure that you take care of all your liabilities.
I understand.
Yeah, because if something happens suddenly, you may not be able to liquidate your assets fast enough to pay off your liabilities. And again, we can use insurance as an instrument to provide that coverage to cover all your liabilities. You can buy a participating endowment plan where we have guaranteed and non-guaranteed cash values. It's very different from the investment-linked plans. Investment-linked plans, depending on what the underlying funds that you choose, and it is all not guaranteed. Your returns will come from the performance of the funds. Whereas in the participating plan, the guaranteed is there, the non-guaranteed is generated from the returns from a participating fund, which you don't have a choice actually, because we put all the money into this, what we call participating fund, and our own fund manager will try to maximize the return. Insurance products come with an insurance coverage. Typically, people will set aside about 10% of their savings to purchase insurance. Yeah. But again, we do what is comfortable, that's within my means first. You can start with 1%, 2%, whichever that you're comfortable with. You can do it in stages.
Let's say with my savings, that surplus that I have, can I do some other investment to increase my cash flow?
There are many other options in the market actually, which includes unit trusts, which includes bonds, for example. But again, before you invest, you need to look at what's your risk appetite and how long you can stay invested. It is important to know what's your time horizon. If you need the money in the near future, then don't invest because it's better to keep in the bank. Although we all know that the bank interest rate is really quite low today, but we still do need to keep money in the bank because we need that liquidity. Yeah. I hope the session has been helpful.
Yes, thank you very much.
Thank you. Thank you.
It's very insightful that she explains in depth what I can take up as to actually assist my financial burdens lah. I still have some questions regarding my HDB loan, so I'm meeting another financial advisor to find out more. Hi Jin Yu.
Hi Shaku.
I thought of actually refinancing my HDB loan. Currently the bank loan interest rate is low, so how can I take advantage of that?
I think that's a good question that many people are asking. HDB loans, they tend to be more consistent and predictable, which might be advantageous to you if interest rates suddenly go up. And also there are also no early repayment penalties compared to the banks, and they tend to be more lenient if ever you encounter difficulties in repaying your loan. And lastly, the cost you want to factor in is the legal and valuation fees. So at the end of the day, you want to review how much savings you are actually getting from these lower interest rates over the tenure of your loan compared to some of the costs you're going to incur, as well as some of the risks involved as well.
Currently, I'm using my CPF OA account to actually pay off my HDB loan. Now, should I use my CPF to actually invest?
In terms of investment, you really want to see whether is this money needed for you to continue repaying your loan over the short term. Because if you need this money for the short term, then we would say that you do not have the ability from a time horizon perspective to weather the volatility that comes with investments. Alternatively, rather than investing, you can actually look at transferring some of the surplus CPF OA into the CPF special account for higher returns, because the CPF SA gives a 4% guaranteed rate. Although one thing to note is that any monies transferred from the OA to the SA cannot be transferred back again.
Thanks for the clarifications.
Okay, no problem.
I think right now might not be the best time to invest lah, because we have 3 young kids and Tori is starting school next year. We might need the cash for something else lah at the moment.
I won't be refinancing my HDB loan in the sense that because with HDB loan, I'm more confident that I don't need to have any extra penalties that I have to incur compared to a bank loan. Right now, my priority is to provide for my family, for my retired parents and my kids' education. In the future, if I have that surplus, then maybe I'll consider investing. But the current investment now is for my kids' education using the CDA account. Hopefully, it will benefit them in the future.